thanks. It's good to be here, and I hope you guys are doing well today. I'm glad you decided to spend some time with me. I'm in North Carolina too right now, Dan. So there's a lot we're going to talk about today. We're going to center it around market profile and my derivative of it. So one of the things that we're going to talk about some methodology behind the scenes that makes it all work. And the product that I've developed, that quite a few products in my software company are centered around, I believe takes all the guesswork out of time in the market and individual instruments. But first I'd like to share with you a story of how this kind of all came to be. And the gentleman that was speaking before me was alluding to a lot of things that I'd done in Chicago and Chicago Board of Trade. But one of the things that really was my light bulb moment, if you will, was, trading's trading, and you have good months and bad months. And one particular month, I had gotten beaten up really, really badly in the Board of Trade. And I'm standing there thinking, maybe I'm out of my league. What am I doing? I can't do this. Maybe this isn't for me. Maybe you have been through some of that before. If you've been trading long enough, you kind of start asking yourself questions. And that exact moment, I feel this hand on my shoulder. I turned around. It was my mother, actually. I was like, what are you doing here? How did you pop up in the Board of Trade today of all days? She had come up to just say hello. She had been in the office observing what was going on and all the wonderful comments I was making about myself at that moment. And she decided to say something. She said, first of all, you're never going to make money trading if you keep losing money trading. I said, thanks, Ma. I already figured that part out, but thanks. It's nice to kick somebody when they're down. Now, this is arguably a woman with the least knowledge about trading that's ever lived. Then she said something else that was pretty important. She said, it's not your job. I said, it's not my job. She then grabbed me by the arm and told me that it's your job to use your math degree that I paid for, develop a system, and allow that system to do the work. Then it's your job to walk to the bank and collect the money. I said, I like this part. She also told me that I wasn't going to trade again until I had a plan to use something that I already knew worked. I thought to myself, what a novel idea. She said, this is what you need to concentrate on, being numbers, and this is what you need to focus on. So when she shared this with me, everything changed for me. She enlightened me to what my job was and what doing what I could do would be the best situation for me and possibly others in the office. We had about 50 traders on the floor when I was there, right there with me. At that moment, I knew what I needed to focus on and I knew what I needed to let go of. I wasn't God's gift to the trading world at the time, but I did have a talent for making sense of things mathematically. And it took a complete novice in the trading world to see it. So I stopped running around trying to explore everything and instead focused on the one thing that made sense to me, market profile, which is what we're going to talk about today. This one thing has been heralded as one of the most logically accepted ways to look at the markets out there. And 2 years later, that 1 5-minute conversation took me to having a reliable way to analyze financial instruments, make money, and speak globally to the largest fund managers in the world on behalf of Bloomberg. That logic that we'll talk about today is embedded in these projects, being the profile indicator and the edge. So that's how this endeavor in the market profile started. I actually ended up being on floor 38 with Pete Stottlemyre for 2 straight years in what I would call a very subjective outlook on market profile. If you know anything about market profile and Pete Stottlemyre, you know that he probably, spent the majority of his formative years in the Board of Trade developing a system that we're going to talk about today in particular, but being able to look at volume relative to price or time price opportunities or things like that. One of the things that was really tough for me, and one of the things that turned things around for me as a trader and being able to kind of take it to the next level, was taking it from a very subjective viewpoint into a very rules-based objective viewpoint. So I think you're going to see that today, and you know, the product, the edge that we're going to talk about today that centers around market timing and some of the profiles that we're going to look at, you know, that makes it about as black and white as I can portray it to you. So today's agenda: where and when to take positions, volume and price analysis redefined, find simple trade setups using the edge, and question and answers. Now the big questions: how can we know the direction of the market? How do we know when a shift in control is occurring between market participants? How do we know where these transitions are occurring and when the best trading opportunities are happening? Where are the areas to be aware of to enter and exit trades? And this is what I've boiled down the original market profile into a derivative phase. I'm showing you a glimpse of it right now. We're going to talk about these profiles, which are automatically outputted on your screen on your charting package as you see that blue, red, and green line down below. And we're also going to talk about the aggregate versions of it up top. Now, I'm probably not making a lot of sense yet, but we're going to go through now some of the formative things that I think you need to be aware of to really grasp the aggregation of the profiles which are up top, excuse me, and the profiles themselves on an underlying instrument like the S&Ps down below. I thought it would be great to create a standalone piece of software that boils everything down to a very simple set of descriptors. And that's what this is all about. So we can understand the tide of the marketplace shifting and what side of the market to ultimately be on. So what if we could use a concept called market profile to find out where the institutions are trading and trade with them instead of against them? What if we take this concept and put it into a very rules-based environment to always trade successfully? So what we're going to talk about today is volume relative to price. What I'm showing is volume relative to time. This is an IBM chart, and we are not going to talk about this today. This is volume on the bottom relative to time. Each bar up top is a day in this particular example, and each particular bar down below is relative to that time frame. This is not what we're going to talk about today. So just a little bit of background here on market profile. The original market profile was divided into 30-minute periods, and we were looking at the price span that happened. As you can see in a 30-minute period, this is when the S&Ps were way, way, way cheaper than they are now. In this example, 1063 up to 1070 the first 30 minutes. The next 30 minutes, the price span was 1066 to 1072, and so on throughout the day through 30-minute periods. What Stottlemyre did is he labeled those 30-minute periods by letters, all right? So that bar B's, this bar C's, and so on. And by the end of the day, he collapsed everything to the left. So all these letters just kind of, again, got collapsed to the left, and that's what he called a completed profile. And this is what I would, you know, consider a very subjective way to look at market profile, and there's a lot of innuendos here. And these are called time price opportunities, these TPOs. You don't have to remember any of this. I'm just giving you a little bit of background here. So what I wanted to do was to look at volume relative to price. And here's volume, just like you saw in the previous picture, and I've got price on a horizontal axis instead of a vertical axis. But what I wanted to do is put it in the familiar metaphor of price on the vertical axis and volume on the horizontal axis, showing how much volume actually was at that price during this time frame. And I want you to think of this now. I'm going to go back to this slide. All right. I want you to think of this moving forward as a bell curve analysis. Everybody's probably had some brush with a Statistics 101 class. And the meaty part of the bell curve is usually where most of the data lies, and usually within one standard deviation away from the peak of that distribution, about 70% of all data points lie. And I want you to look at this. Does that look familiar? What we're looking at is, again, volume relative to price. And we want to be concerned with what is the fair auction as we see it with our algorithm. And this is the most important part. What is the balanced area? And when does an instrument become imbalanced above or below? And these critical inflection points. So moving forward, what I did is I developed an algorithm based around this market profile concept and working with Pete Stottlemyre for a couple of years and being able to understand, how do we make this into a very rules-based environment? Well, simply put, it's what we talked about so far, and there's a lot we can talk about this simple concept, but we're looking at the unfair high, which is the top part of the balanced area, the unfair low, the green line, and this light blue line here, which we call the point of control or the mode of the profile. Now, if I go back and look at this means the average of the data. What we're concerned about is the mode of the data, the most well-traveled point in the particular profile, the POC, I'll refer to it as. I refer to these areas as balanced areas, fair auctions, unfair highs, unfair lows, and POCs. Let me make sure I'm seeing the questions. If you guys are asking questions right now, I somehow have hidden those, so we're going to have to, oh, here we go. Okay, I'm seeing the questions now. Sorry about this. Give me 2 seconds and I'll expand these out. All right, so if we can, let's try to ask questions towards the end, but I'm more than happy if there's something pressing to answer it along the way. All right, so we're looking at a developed profile derivative that I've developed. And the unfair high is the red line, the POC is the blue line, the unfair low is the green line. And what we're going to look at is just an example right now. That same example of IBM with the volume that was down below relative to time. And now we're looking at these profiles where volume is relative to price. Now, I took this snapshot within the month, or within the last couple of weeks. So IBM isn't necessarily there right now. But what I wanted to show you was the history of the profiles, the profile indicators, I like to call it, as it's outputted along the way. All right. Now, recently, you were told on IBM that it was okay to get back in the water on the long side because we had broken profiles for the first time on a daily in a long time. But think of how interesting it would have been to have this tool. And remember, we're going to wait and pick our battles around these inflection points, and we're going to talk about a lot today involving this. But waiting to pick our battles on the back and fill-in support areas, breakout areas, and what we're trying to do in essence with this information is be able to block out one side of the marketplace. So as a trader, and again, I've been involved with some pretty serious trading operations and done a lot of, obviously portfolio management myself along the way. As a trader, the only thing you can really ask for, the top thing is, how do I know when it's okay to be long, not okay to be short, or okay to be short and not okay to be long? What the original market profile didn't do for me was to put me in that particular frame of mind. What I wanted to do was develop a rules-based environment to where I understood when we were breaking down on profiles like right here, you got to be a complete moron in my book, the way I've developed this, to look at this any other way than it's okay to be short and not okay to be long. And this little simple example right here on IBM allows me to make things very, very black and white and able to put things in a very rules-based environment. This is just a very general rule, but think if you'd have used that on IBM to not try to pick battles on the long side. You got profiles trailing down and you've got no break above profiles until right here. It was pretty much short-lived, but again, these are some things to keep you out of trouble. One of the biggest comments that I get constantly is this little simple algorithm indicator keeps me from doing things that I shouldn't be doing. All right, here's IBM on a weekly, same premise, long-term setup. Just wanted to give you a shot of that. So one of the simple rules using this information is don't be short when prices trading above profiles. Very, very simple to grasp, right? And conversely, don't be long when prices trading below TAS profiles. You'll see these profiles, sometimes they're wide, sometimes they're elongated, sometimes they're thin. Sometimes they stay in force a long time, like right there, and sometimes they're pretty short-lived. So the algorithm's actually automatically calculating when a new balanced area needs to be put, a stake needs to be put in the ground where a new balanced area needs to be put in force. And for instance, the height of that particular profile right here, I'm just going to read what I have written here, has its own volatility checking or calculating algorithm. The narrower the top to bottom, the profile, the lower the volatility, just like down here. And the wider the profiles, the higher the volatility. This helps you accurately measure risk to reward ratios, a cardinal rule before taking any trade. So what are the cardinal rules? They're, can I risk one to make three? Can I block out one side of the marketplace so I'm either sitting on the sidelines or I'm in the market on the right side where the leverage is, where the odds are? All right, so these are real simple concepts that a lot of traders will kind of go through with you, but what I've developed is, in my opinion, a way to technically look at this in a very black and white way. Here's another screen looking at these profiles, and I think you're going to be really impressed with what you're going to see as we get farther into this particular presentation. We're laying a little groundwork right now, and that's all we're doing. All right, so this is just a little picture. I've color-coded green. Again, just following those simple general rules. Green, okay to be long, kind of in a chop inside the balanced area right here. Okay to be long, okay to be short, not okay to be long, and then you've got okay to be long. You've got a big trend that's developed and profiles continuing to edge up. But more importantly, it gives you areas to understand where I can pick a battle on the kind of backing and filling area and when I can trade breakouts. All right, so this information, trying to get my questions on the right screen here. All right, so this information put into a real kind of environment here for you to look at on Tesla. This is a snapshot I took of Tesla on a weekly. I think since it's come down and revisited again since I took this snapshot, but I think Tesla on this chart had made 130 points if you just held it. If you use the profiles and just take some simple concepts that we just talked about, when we have a new profile appear like right here, these are automatically outputted. When you have a new profile appear, you've got to be willing to take some off the table bare minimum, because as we look at these balanced areas, you'll notice most of the time, and I'm talking about 83% of the time, the studies that we've done, if you have a new balanced area that automatically appears, and that will be done for you, you'll visit the other side of the profile bare minimum. So when you have these type of events, the next chance you have to look at picking a battle might be here, right? I didn't even calculate what this particular stock made going down below profiles here. I didn't even add that in. But that particular crazy animal called Tesla, there's ways to tame it. And, it's very easy to let the market come to you on your terms by looking at trading on these trigger points. I mean, the gentleman before, he gave a great presentation. He talked a lot about Fibonacci and things like that. This is something in the same sense that I feel captures the essence of market profile and puts it into a derivative, again, a very rules-based environment that makes it extremely black and white for a lot of people that use this. Some of the biggest institutions across the planet use this on Bloomberg. And I talk to a lot of them a lot. There's about 350,000 global subscribers to Bloomberg terminals right now, and we get about a 1.5% penetration rate on any day, as I've seen the data where people pull this up. Now, a lot of we can talk about institutional outfits for a long time, and what my impressions are, they're good and bad. A lot of institutional guys they know how to raise money. They know how to put the white shoes on and the tie and raise more money. But there's some great traders in the institutional world, don't get me wrong, but they're always looking for ways to pick battles, where the odds will be in their favor so they can leverage option strategies. The gentleman before, just using for example, how nice would it have been to know where to pick a battle and sell a put spread, like sell puts and buy puts, very hedged scenario, when you're waiting for the market to come to you on your terms, right? Or when to start buying volatility on some calls here. There's a lot of techniques involved around even enhancing the odds past those general rules that I talked about earlier. Here's Tesla on a daily profile, just to give you an idea. That was weekly before. All right, here's Apple, same scenario. How nice would it have been to let go of Apple around 125 and then maybe pick it back up when we started breaking profiles again. And as profiles were edging higher, being able to, again, trade this and time it a little bit better than possibly looking at some other indicators that don't take market profile into consideration at all. All right, moving forward, this is the Japanese yen. I mean, we've shown weekly and daily time frames. This information is very valid to use on shorter term time frames. So Japanese yen, okay to be long, not okay to be short. Okay to be long, not okay to be short. Then it's okay to be short, not okay to be long. All right, these are some very simple rules involving this algorithm. Here's gold on a 60-minute. Okay, but we're coming to what I would consider the good stuff right now. This is where we put some time and energy into it. What if we could aggregate all the S&P 500 stocks TAS profile information into simple descriptors? What if we could market capitalization weight this information? And what if we put this information into an easy to read dashboard that tells you exactly what to do? So the information that we've looked at so far is applicable, and you're going to receive that product with your subscription today. And that's available on any time frame for all instruments, all right? But what I wanted to do, because I feel like this is so important to know when the tide of the marketplace is shifting on lower term time frames. Now, we've had a very low volatility environment lately in the S&Ps, and that's you're not really supposed to trade a lot when the volatility is low. But if we're getting into something where we can understand the shifts in the tide of the marketplace in a little bit higher volatility environment, then what I wanted to do was be able to easily make that a red light, green light system based on what I've just talked to you about. And what that means is we want to look at when markets are balanced and imbalanced. Like I talked about at the very beginning of this presentation, balanced markets are an expression of time dimension, right? Imbalanced markets are an expression of price dimension. Now, what does that all mean? Success in trading is dependent on traders being able to accurately differentiate between these dominant phases of market movement with near certainty. That goes for anybody in the institutional world, all right? They're not going to trade when there's no odds or any real serious reasons to trade. They're going to pass. That's not what your broker probably doesn't necessarily want me to give that speech today, but you want to be patient and wait for these opportunities to happen. Now, what I was speaking about earlier is aggregating the information with those profiles on a short-term basis. So what I have done is taken on a 5-minute time frame, taken the statistics, and this is a product called The Edge that we're going to talk about today. It's a standalone product, doesn't need a data feed, comes right from the servers, does all the calculations for you. How many stocks in the S&P are trading above profiles? How many stocks are trading within profiles? And how many stocks are trading below profiles? If I understand that information, I know what type of internal aggregation is going on with the S&P underlying instruments. So when you look at trading the S&Ps, a lot of people are just going to look at the chart. That's all they have, all right? They're going to just look at the chart, and they're going to wonder between market makers what kind of games are going on in the opening. Why did this thing gap up? I'm not in control of the market, and all I'm looking at is my S&P chart on TradeStation or Thinkorswim or whatever. Remember, the way markets open and usually the way markets are conducted, market makers, their prime objective is to get filled, all right? And when things are out of whack, when markets are in balance, hopefully, you know, if you're a good market maker, you're going to understand when to double down and when to actually just kind of reverse your situation, when you have to cover, things like that. So what I wanted to do was understand in very simple descriptors here, a green line, a blue line, and a red line. The amount of stocks trading above profiles is the green line, right? Within, aggregated, the blue line. Below, aggregated, the red line. And I wanted to understand when there's certain situations happening relative to what's going on with the major index profiles themselves, right? So to put it simply, when this red line's above this green line, it's to, in most situations, it's okay to be short and not okay to be long. And what I did here is Steve and I, my partner in Chicago, we were basically given a small video, and I took a snapshot or two of what was going on here during this day when we had some volatility. So when that red line's above the green line, it's okay to be short, not okay to be long. There's some extreme situations we're going to talk about later that are somewhat reversal situations. But here's a lunchtime kind of period when most of the market was, when the blue line was prevalent, or the amount of stocks trading in their balanced areas was prevalent. I mean, there's some simple do's and don'ts about don't trade at lunch. A lot of people will tell you that. It holds true, and you'll see it graphically represented here in the amount of stocks trade within the S&Ps trading within their balanced areas. Remember, the profile, inside that profile is what we call the balanced area. And when we start breaking above index profiles down here, and we start trading breadth positive, as I like to call it, remember, it's okay to be long, not okay to be short. So those simple types of rules are nice to have on your side, and here's kind of the rest of the day that I've already covered. So here's five simple trade setups using the edge, and at the end of this presentation, I want to go through some real-time examples. I want you guys to, you know, ask questions. We'll pull up charts. We'll look at them using the profiles. But here's some simple trade setups using this particular product. So when we have a clear understanding of which way the true tide of the marketplace lies, then we can efficiently block out one side of the market and only take longs or only take shorts. In effect, we're making the statement, it's okay to be long, not okay to be short, or okay to be short, not okay to be long. So I blocked out the middle ground on the edge. And some of you are probably looking at this going, man, what a wacky little piece of software. There's not a menu item on it. There's not a there's not a lot of bells and whistles on it. It's just sending you information from our servers that are crunching a lot of data, so you don't have to do it on your own terminal. And you know, unless you're got the latest China processors that I forgot the name of them, you're probably not going to be able to do this in an environment at your house. So we've got this on, you know, the 12-core Xeon servers going on to crunch all this, and it delivers an output, I think, about once every 3 to 5 seconds. And there's a little bit of a price chart down below. And you might be saying, well, how are you running all this? And we're doing real-time price derivatives here. All right, so we're not disseminating data. You will not be able to see what the price of the market is on this, but you will be able to see indications of where the market is and what the market internals are doing. So there's a little bit of a price chart down below, just because. And there's also these aggregation of data points here. So I took out the middle ground. I took out all the balanced areas here, and I just wanted you to see the action of, okay, here's the S&P futures, and here's the profiles on the S&P futures down below on a pretty short-term time frame. And you'll notice, it's a pretty thin profile. We talked about this before. Low volatility usually goes to high volatility, but we break out of these profiles and kind of form a resistance, now support. I know you've heard that before. We start getting breadth positive at the same time. And we don't break below profiles till here, that basic concept we talked about earlier. Then we're going, at the same time, we're going negative breadth. We're going red line above green line. So as an intraday tool, it's nice to have this as a confirmation situation. And as you can see, the worm kind of turned. We stayed, red line over green line the rest of the day, and we never breached profiles. We kind of flirted with it there. But again, it's something. Okay, we're going to answer all those questions. Looks like Rosa had a good question at the end there. We're going to go through 4 more setups here. My audio's lost, or are you guys still hearing me? Is everybody okay? Okay. We're going to go through a couple more setups here, classical setups using this product. When a crossover happens above the blue line, think about this for a second. The amount of stocks trading within profiles, the blue line, which is rather infrequent. We're in a very indecisive state. The market is trying to resolve itself one way or the other. Momentum after these crosses can be rapid. All right, so what does that mean? That means that there's a tug of war. I went back to the same example. So when we have a crossover above the blue line, that means that market participants are trying to resolve themselves one way or the other. And in that tug of war, you'll usually have, as long as we are, remember, if the blue line, the majority amount of stocks are in the balanced area, like right here, this was across below the blue line, not a big resolve that was happening here. We ended up coming off and actually clarifying ourselves by getting the red line taking control, and the market participants on the short side being in the most populated camp. But when we have these resolves above the blue line, we're pretty much going to have some rapid movements outside that, or as we kind of move forward. Market imbalance extremes above. This is my favorite trade. If you did nothing other than this one trade for the rest of your life with this product, I hate to sound salesy here, but these are really high probability setups in setup number 3. All right. And we've got an app that delivers you those setups when they happen real time. And I'm going to talk about that too. That's actually included in this. Market imbalance extremes above the 66% line, which cross back down below the 66% line, can alert the trader to look for other confirmations that trend exhaustion could be happening, and then a contra trend position could be taken. So the way that I trade in general is I always look at the long-term situation first. If the weekly and daily on my profiles and all my other setups are saying be long, then on an intraday basis, guess what? I'm trying to still block out the short side and only take long opportunities, right? But at times, throwing that out the window for a second, at times there's a 66% threshold line when the amount of stocks in this, any one of these 3 camps are trading at 66% or higher. It's kind of like that stochastics or RSI situation where you got everything at an extreme, everybody's on one side of the boat. You want to see, and this is a situation where we started breaking below profiles. We were up above the 66% line. We kind of get that rollover, which is a classical setup with this product, and you start hearing these whoosh sounds, So at the same time, you have people reaching for shorts. You have the amount of stocks that are in the red line, in the amount of stocks that are trading below profiles, these aggregate calculations, people are starting to reach for the other side. Now, this was a really nice trade. It was a great setup. We haven't had a lot of these lately. Then they've been very sparing. We almost had one today, almost, right? But we had one, I think, a couple of days ago. We made about, I want to say, 8 or 9 points off of it through the app. But the premise of these concepts are try to, again, lose a little, make a lot. If any other trader's telling you, oh, I had 83 victories out of 90 last month, you know, that's, and I picked up, you know, $1 every trade, and the trades that I lost 10. That's exactly opposite how good traders trade, by the way. They are happy with 40 to 50% winners as long as they're making 3 every time they lose 1. That math works out in your favor in the end. Trust me, it is a statistical fact. But any guys out there who are selling naked options and things like that and having all these victories, and then, you know, see many of those guys being taken out in body bags later. So what we're talking about is trying to increase the odds, getting into the classical setups, which this thing paints the picture for you, and use the profiles at the same time for that confirmation factor intraday. Here's another one, extreme reversal. This one happened, this was August 25th, and this is not the last time it happened. This was just the slide that I took the snapshot on that day. And as you'll see, this price action below, you know, we end up coming off, right? Then we kind of get into the lunch situation and blah, 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 and you're not supposed to be trading anyway. And then we had a kind of a nice confirmation towards the end of the day, and that was the end of the day there. But again, I wanted to show 2 setups on the same screen. Divergences. This is one of my favorite things out there, is a divergence in price action relative to other instruments, all right? So what we're going to look at with this one is divergences in price action relative to peaks and extremes will alert the trader to trend exhaustions and possible targets being met for the short term. I think I failed to say that I've done quite a few videos in a training area that you're going to have access to, you know, in your subscription. And basically, those are real-time during the market setups that are happening with the edge, and also using the profiles. You're also going to get a pretty big 77-page manual that I wrote on the indicator or indicators. And I don't want you to think that this has all got to be absorbed in an hour in one webinar. What we're doing is touching on different things. And, you know, if you're going to, you know, really use these products, you know, please do a deep dive into the information. Again, you know, we're on divergences, but I kind of had to stop myself and remind you guys that there's going to be plenty of information coming down the pike, and we're doing training sessions too. So, all right, divergences. What does that mean? So here, when we had a divergence right there, that means that we had price action here, and then we had more price action go lower here, but we had lower highs in this particular red line. So we had an extreme. All right, that's great. We didn't really have people reaching for longs yet, right? We started having people really reach for longs. So we had the market, even though this red line's above the green line here, and you're going, wow, I thought we were supposed to be short, the red line's above the green line. Again, this is a special case situation that we're looking at that I wanted to point out. And you know, we've got about 10 good setups, I believe, in the videos, but there's, again, quite a bit of information that's going to be headed your way. This divergence told us if we were long here, if we were trying to go long in this particular setup here, again, you know, stops are the most important part of trading. Playing defense, by the way, when I had a pretty large prop operation in Chicago on floor number 12, all we did was, you know, we used to get, again, this is just a story. We get 5 guys out of college every month. We'd put them in a training program, right? We give them as much information as we thought we could to give them a fundamental platform to stand on, right? Then it was up to them to kind of uniquely twist it to kind of take it to the next level. We knew 1 or 2 of them maybe were going to make it. That was it. I didn't have this information to give to them back then. But one of the biggest things I wanted you to get out of what I just said is, you know, playing defense is the biggest part of starting with a new system. So when you use this, you know, trade a little light, trying to figure out what's going on first, or even trade a demo account, because that's exactly how we ran a pretty profitable, successful prop operation, was teaching everybody first how to play defense. The offense will come, but as long as you can just not get, have your money taken from you on a day-to-day basis, then you have something special. This is not, again, there's a lot of people out there selling dreams. I'm trying to give you some tools to try to beat the odds with. All right, so that's a little bit about a divergent situation. So when you see those, hopefully you can take advantage of those types of situations. And Rosa, I promise I'm going to answer all your questions at the end. Setup number 5, be aware of all major profiles and inflection points. Rank them from longer-term time frames to shorter-term time frames. The purist will ignore these, but in our studies, they must be adhered to. So what does that mean? So let me go back to this. There's a part of the edge. I'm going to drag this over here really quick. This is the edge live today. There's a section over here. I'm just going to reset that. That give you on 4 different time frames the inflection points of the profile that is happening on that particular, on the S&P 500 futures. This is the level of the market. Remember, I'm not disseminating, if you'll see that bounce around, I'm not disseminating prices here. This is where the level of the market is right now, and these are the time frames to be aware of. We almost, I was kicking myself this morning. We almost had an extension trade right on the opening. Some people took it early, but we didn't give out a signal on it. So I think we dropped 10 points there. But again, the major inflection points that I'm talking about on the side over there are derived out of the profiles on these 4 major time frames. And all we're doing is presenting them to you over there, because when they line up, they become even more powerful. So when I took these snapshots on the S&Ps, God, it felt like yesterday, but that was, God, 150 points ago, I guess now. There's the weekly time frames, and see how important it is to be aware of these inflection points. This is the daily time frame. A lot of times, you'll see these things break down, and they will go back and, like magnets, be revisited. So, they're extremely important to be aware of. Here's a 240-minute new profile appears, and voila, the move's over. And this is our 60-minute time frame. So who's the edge good for? Any trader, beginner, intermediate, or expert. Any trader who wants to have a powerful, accurate tool to time their trades during the day. But remember, you're going to also have those profiles to use on a lot of your different charting packages. A trader who wants to stop guessing for trades, go with the one market timing tool that literally defines the rest. And anyone who wants to master good risk management in all trades at any time frame. So one of the things that I want to talk about next before we get into questions, because I really want to show charts and show some live situations here. The Edge, it's a standalone indicator platform. It requires no data feed, and you can install it in 2 seconds. Right? Easy to access real-time data, clear trend signals via the Edge dashboard. That's what this is. So you're getting the major inflection points right here. And a lot of times, and some people out there will probably laugh when I say this, but sometimes this is when we had, if you'll see that, it's an extreme trade, that's an extreme trade, and that's an extreme trade. We had a couple of those that were really, really cool the day I took this snapshot. It was over 2 days, I believe. But some people are going to laugh at this. A lot of times I won't even look at my charts when I'm using this tool, because a lot of times I will somehow artistically see things that aren't there on the charts, and I'll start seeing patterns and setups and all kinds of things. Sometimes I just kind of throw that all aside because I have everything I need right in here. I know the major inflection points to be aware of. I know where the market is. I know what side of the market, the tide of the market place changes are happening. So why in the world would I need to put a lot of extra thinking, looking for head and shoulders, this and that, blah, blah, blah. I wanted to make it a really mechanical process. So, some of you guys out there know what I'm talking about. Sometimes you just see things that aren't there. So blocking out the charts, you can actually trade without the charts with this thing, is what I'm trying to say. In this package, I'm also putting in this profile indicator. Some people call them the boxes. They're, pretty popular, at least in the institutional community, and a lot of retail traders, use this information. But the institutions are. I mean, I speak at 25 different cities with Bloomberg on their charting days, and it's interesting that I was in. This is a good story. I was in Beijing last year, and a guy popped up. It was 400 people there, and I was talking about some of the algorithms behind all this, and a guy popped up and said he needed the code so he could complete his algorithms. And it's something I've spent a lot of time on that I would love for everybody to be able to use. But the code is something we do a lot with our own algorithms. We do basket trading and all kinds of things that I've worked on over the years, and portfolio management systems. So again, we hope that you'll find this very useful, especially on most instruments that you can put this on. Futures markets, Forex, stocks, gives you these high value areas, low value areas, and point of controls. And these outside of these profiles are great areas to pick battles and to play defense, more importantly, like we talked about. So this is something else that's happening. We wrote an app. I mean, I have an entire software company. I think he gave my company TAS Trade Soft. That's my software company, but TAS Professional is our kind of trading side. But we developed a server architecture and an app to kind of run the algorithm that's going to give you alerts and trades actually of what's happening with the edge. Now we've past couple of trades, I think we've made $100, lost $100 here or there. We had a couple of $600 and $400 and $500 winners recently, but the market got so not volatile. Again, like I think the gentleman said before I spoke, I mean, you're a slave to volatility. I mean, there's no way around it. If it's just not there, you're going to get chopped up a little bit, or maybe it's not worth trading whatsoever. I couldn't agree with that any more than 100%. So again, it's not a fail-safe, red line above green line target system, but overall the system's winning even in this volatile, low volatility environment. So we're actually we're not doing SMS texts on this because we've actually had some delayed alerts, whatever, through different mechanisms and different providers. We're right now just focusing on the app itself because that's the most efficient real-time way to get you a signal on this. All right, so that's included. I'm also going to be doing some market sessions with Steve out of Chicago, and you guys are going to thoroughly enjoy those. I mean, we answer a lot of questions during those sessions. They're going to be announced by Winvesting. And this is what we're doing today, and I'm going to be able to answer a bunch of questions hopefully later, but you're basically going to get the edge and the indicator and that app for one price. There's a god awesome amount of resource center materials that they've gotten from me to put into the secure area after you get your subscription, user guides, video tutorials. We've got the indicator working on about 10 different platforms right now. Thinkorswim is something we're working on right now. We found a way to finally kind of deal with that and protect the code. But in the meantime, you can use NinjaTrader 7. It's free, I believe, and just go ahead and use it if you don't have one of the platforms that we support. So if you throw everything together, and I'm not even pricing the app here included in this, we're doing it for $4.97 a quarter, and it doesn't expire Sunday. It actually expires tonight at midnight. So I need to. That's not true. Sorry about that. Tonight at midnight is when this expires, and if you add all this together and price it, I welcome you to surf around and look at things on any website. We do have some resellers out there, but yeah, it's basically $1,000 off today. So what I want to do now is I want to go through some questions here. Somebody said it was weird talking about my mother because of oh, you know, Marcella said something. It's weird you're talking about your mom because my mom's sort of been watching me in this trading endeavor. Yeah, she needs to. And you used the word endeavor. I'm so happy you mentioned that word, because one of the things that I used to ask Pete about market profile, I'd say, look, what do you do here? I mean, this is so subjective. I mean, you got to be an artist to read this. And he would always come back with something like, that's an endeavor to persevere. I was like, that reminds me of the old Indian on the Josie Wales movie, the endeavor to persevere. So, again, going back to what we're talking about today, wanted to bring everything into a very rules-based environment. And one of the things that the gentleman was speaking about before me, doing option strategies, how better, if you're going to do them on a short-term basis, obviously this product is great, but if you're going to do them on a longer-term basis for those weekly setups where you can put that credit spread on, or some directional trades, going long the S&P futures, short the calls, short the puts against it, whatever your kind of strategy you're doing it, it's great to know when the market has reached an inflection point that's very, very powerful within the market profile balanced area. And kind of letting the market come to you is a big part of those particular types of setups. POC, what does POC mean? It means point of control. It's the mode, the volume mode of the profile, Ray. That's what that is. Is volume profile used for short-term intraday trades or used intraday swing trading? Well, the short-term profiles, that's a great question, actually. I'm going to pull up a server over here. I have everything on different remote servers here. So this is today's action in the S&Ps. All right, here's our current chart on the weekly. Here's our current chart on the daily. Right? Here's our current chart on the 240, right? So what's happened on the 60, and if you're talking about, we had a breakdown here, obviously, and we closed and retested on that 79 area. But if I look at a 5-minute profile, and I think you're asking, can you really use this information to scalp on a very short-term basis? Again, here's the 5-minute profiles. These are not painted on after the fact, right? This is exactly what happened today. So when you're using this on a short-term basis, absolutely you should be looking at these shorter-term profiles and understanding how much volatility is in the current landscape. One of the things I didn't talk about today in the product was there's a volatility component here, right? A gauge. It lets you know how big the balanced area currently is on a short-term basis. So if you're doing short-term trading, that's kind of nice to know, right? So let me get my slide back up here. So, depending on the time frame that you're looking at, David, I think he's left. All right. Well, depending on the time frame, you want to look at the profiles relative to the type of trading that you're doing. But again, the way I use these profiles, and even on a short-term basis, I try to get to the point where I can block out one side of the marketplace. So if I know I'm only going to want to take longs or only going to want to take shorts based on what the long-term MO is for the instrument, that really makes it a lot easier. Yeah, so David, so you don't show the bell curve, just the 3 lines of it. That's correct. Those are the 3 important lines: the high volume node and the outside limits of what we call the balanced area. Can you show real time today how you would trade it? Nice to use in retrospect. Okay, Rosa. I think I just showed a couple of charts, Rosa. I want you guys to throw out some instruments I'd like to look at for you. Audio lost. Okay, more questions. How are big gap up and gap down treated? Max, okay. Well, I mean, you know, when you have a big gap up or gap down, you're not necessarily on a short-term basis going to be out of balance. You know, so again, you know, you're going to look at the major inflection points over here. You're going to understand where they are and can I play defense against them, and what side of the marketplace on a short-term basis I'm supposed to be on, so I can orient stops and put on trades. If you're gapping up or gapping down, you have to look, you know, considerably at, you know, like this morning we gapped up, we almost had an extension trade in the edge. A lot of people took that trade because I think it was 65 point something instead of 66. But you're not necessarily, you don't have to necessarily be out of balance on a very short-term time frame on the edge in that gap up, gap down scenario. All right. Do you use this to trade yourself, Rosa? Yes, I do. How does your indicator measure relative to other breadth indicators? That's a great question. 80 line, high loss, etc. William. What I'd like to think of this as is almost the fifth market internal calculation. So you've got the advanced decline line, you know, breadth calculations. What are some of the other ones? I'm kind of at a loss right now. The tick, the trend, yes. Advanced decline line. I almost like to think of this as the fifth market internal, because there's not anything out there that's aggregated market profile calculations like this. I mean, you're not going to find it. There's nothing out there. I couldn't find it. That's why I created it. But these derivatives of the original market profile, being these three lines, like somebody asked before, are boiling it down to a real rules-based environment that you can, I think, lean against. No, the tick trend, advanced decline, it's not written into the algorithms. It works with NinjaTrader 8 or only Ninja. It's on NinjaTrader 7 right now. But we are working on NinjaTrader 8 because we've had a lot of requests for that lately. Does it work with IB? Does that indicator work on IB charts? No, but the edge you don't need a charting package for. So we haven't ever had anybody ask about IB, actually. Amazingly so. Do you have a yearly price? Sam, yes, we do. Just send something into the help desk. I think it's help desk at Market Profile Scan. I think that's somewhere. Or actually, send it to Winvesting, and I'm sure they'll get with me. But yes, Sam, we do have a yearly price. When will this stuff work with Thinkorswim? Believe it or not, we're working on it right now. We have 2 programmers trying to lock that up. So is it Chow? Chow, is that your name? Yeah, that's imminently happening. MOS, okay, 30-year bonds. All right. This is being recorded? Yes. How long is the 497 good for? It's good until tonight. Expires 12 a.m. tonight. I apologize for not having that slide correct. And this is what happens when you try to write with a mouse. I could have swore I changed up this slide before our presentation here. Okay. Yeah, it's being recorded, and they're probably going to be able to send this out. I think we've got about 10 more minutes, guys. So I want to show some examples here. Somebody asked me about MOS, and as you'll notice, I keep up. We've got some other indicators that if you guys are subscribers, we're going to get these out to you also. This is a navigator indicator down below that I've written quite a bit about. And I write for Bloomberg Markets Magazine and Bloomberg Briefs, so if you'll catch me every once in a while using this same information to speak frankly about quite a few different sectors. And okay, so somebody asked me to look at MOS. So, you know, obviously the edge is built around trading the S&Ps, period. All right, it's no No qualms about that. It's an intraday S&P trading tool. I think this is Marcelo's asking me to look at MOS. So this is obviously a gap up the past 2 days. That's a daily. This is the weekly. So here's a look at the profiles. And we've had a little noise, obviously, around the top of this profile here as we look at Mosaic. But, you know, this is the first time it's really showed any technical breakage of what's been going on with the profile. So we had our first, you know, breakdown around 30.5 or 31. And as you'll notice, I'm going to show these inflection points, how they're, here's one, here's the bottom of a profile, breakout, breakdown. There's a big, you know, short entry area. These are breakdowns again. Kind of noisy around the profiles. This is a stock that's not that expensive. It doesn't have a ton of volatility, but I'd say this is a pretty big situation here, and you don't have any reason whatsoever to take this trade off from the long side yet, because when you start having new profiles attempt to appear, that's when you're going to be looking at something to take advantage of taking some off the table. But I don't see any big reasons to take anything off the table here on MOS. Let's take a look at the 30-year. That's another question. This is a futures contract that, you know, just, we have, you know, this was, again, you know, 30-year and the 10-year, obviously an inverse reaction to rates. But as we look at the 30-year, you know, we broke down, we went back and retested right here, right? We still haven't gotten back in the balance area. This is the weekly on the 30-year. But I'd say at this point, and again, you have to keep your kind of eye on what's going on with the broad stock market a little bit to trade this particular instrument. But 152.30 or 153 is the big number on the 30-year right now. And if you're going to short this, you know, that was an area you could have picked a battle there on the short side. You know, it's based on your appetite for risk, your stops. But, you know, I wouldn't want to look at shorting this until I had 152.30 or 153.30. So you're kind of a little bit in no man's land here right now. You either want to confirm, get back into the profile, or rally back up into a major inflection point that you can lean against there. Okay. Why such a short time frame on the offer? People watching the recording won't be able to buy at the reduced price. Well, we've got it open until midnight tonight. My regular pricing is much higher than this. And to be honest with you, every time I do this, I get some hate mail. I'm just kidding. You know, we don't want to keep this out there too long, because a lot of people have bought things from us at a lot higher prices. So when it's open till midnight tonight, and you know, I think when you kind of boil it down, it's about $150. What is that? $150, $160 a month, and you're getting quite a bit. So that's my answer. It's on eSignal. That's no audio. What trading platforms is this on? Okay. We have it on eSignal for sure. Do you have a deal of TAS Indicator Suite? Yeah. Chow, if you go ahead and get in this program, we'll be able to talk about that. You know, I plan on, I'll tell you this, if you guys come to training sessions, follow on, because you know, we want you guys to be fully armed with as much as humanly possible to succeed with all this. I'll bleed out 2 more indicators, which I feel are really, really powerful to have, which is Market Map and Navigator. So, Chow, if that makes sense. TAS Pro Indicator Suite, yeah. What about future price increases? Well, I mean, it is what it I mean, you're more than welcome to go to our websites and look at, you know, this is something we don't want out there that long. So how does your alert look like as an example? Tell you what, let me see if I've got a screenshot of that. Here's one right here. that we took last week. I probably should have showed this already, I guess. So from 1017 to 1025, this is the app that you will have. And it, again, it's try to lose a little, make a lot, lose a little, make a lot, lose a little, make a lot. So this is a picture that I took the other day on the 25th. I think we've had 2 small losing trades and 1 winning trade since then. But this is not going to trade, every microsecond. This is, kind of a little bit more swingy intraday. So, Sam, does that make sense, that app? I'll take it down or however. Okay. How does your alert look like? Okay, there it goes. Are you aware if I could get on telechart? I'm not sure about that, Marcelo, but we can write into these packages pretty easily these days. If you want to get it on Ninja 7, it's free first, and we can okay, let me try to answer. You're not answering. To be blunt, this is a low entry offer that will be followed up by a price increase to regular price. No, I'm sorry. Gosh, I did misunderstand your question. This price locks you in. And I'll be honest with you, I'm going to be giving you more stuff anyway along the way because you guys are in this offer and I don't have to advertise it. So you get 2 more indicators. I've got reports I'd love to send you. And I'd like doing these question and answer sessions also because the more people who understand how to use these things, the more money everybody's going to make. So takes trades before noon, fewer losses. That's, you know what, Bill? That's a fair statement. I mean, the algorithm is not just it's taken into consideration for the signals. What time of day is it? Where are the major inflection points? Do we have a good trade setup? How can I play defense? I mean, there's quite a bit of things put into that scenario. This is only on the S&Ps, Roy. He's asking what instruments does this trade and send alerts on. Right now it's S&Ps, but it's built to actually do quite a few more instruments. But again, this is kind of an edge enhancement, if you know what I mean. I personally I missed a crazy good signal one day, and I started thinking, God, I bet a lot of other people are in the same boat. I was at the grocery store, had a great extreme trade, missed about 7 points, free, just happened. So I asked the programmers to just create an app that would, not have people slave to the desk there. I think if you call Winvesting, they'll maybe direct that to me. How about the scanner playlist? Well, we've written a really, a lot of different pieces of software surrounding this somewhat same premise. Scanner's one of them. Well, we're coming up on 1:30. I just want to make sure Winvesting is around, and I'll go over my time limit here. Yes, the 3-month renewal will continue at the same price. That's completely, absolutely locked in, Mahesh. And we're going to be doing market sessions. They're going to announce those. Those are something we're going to have to agree on as far as time, so we're going to let you know. We do a lot of, education. I mean, I never expect anybody to just, the dark clouds just kind of part and the sun shines all of a sudden on a lot of the things I talk about. I mean, I've tried to cram a lot into a small presentation today. I hope you'll take my apology for maybe being a little disjointed, but it's there's quite a bit of information laying around that you'll have access to, and then you'll have access to Steve and I, which we'll be giving some training sessions on. Yeah, the Edge is a standalone product, requires no other platforms. Yeah, that's correct, Wynn.